Hello, this is Cryptolyze. I hope you are well on this Thursday, October 5, 2023. It is with pleasure that we meet today to talk about BTC, to talk about crypto. On today's program, we are going to talk about oil. We are going to talk about the regulation of crypto in the USA. We are obviously going to talk about the price of BTC, the upward acceleration that we have had, the continuity of the upward acceleration that we had, and the turnaround that we did not have precisely. We'll look at it all together right away. Before starting, I remind you that you always have the possibility of having the educational course financed, which is a training course of more than 60 hours of content in which you will find everything you need to be able to trade investments, understand crypto, DeFi, technical analysis, absolutely everything directly. So it's a training worth 400 euros, and you can have it financed directly with our partner AVATRADE. All you have to do is to deposit 500 euros on their platform, and to use the platform, your training will be 100% funded. We attacked the news by talking about crypto legislation with those I spoke to you about yesterday at the departure of the Republican leader, Patrick T. McHenry. Obviously, the crypto legislation, which was awaiting a vote, will have to wait. We'll have to wait until this position is filled again and permanently. So we'll have to wait. I think it will easily delay the start of 2024. We see a bit of an alignment at the start of 2024, potentially regulation, acceptance, or refusal or further delay of ETFs on the BTC spot. We still see an alignment of the planets. We continue with Polygon. A new co-founder is leaving, so it's second since the start of 2023. As a reminder, there is nothing to worry about. Generally, these are projects that are ancillary to Polygon, and they were called co-founders. So we are still relatively far from having all the people who leave Polygon. It's just that, given what is happening at Polygon and the progress of Polygon, at a given moment, there may be other projects to build alongside, which is at the same time normal when you are an entrepreneur and you want to build new things. You have to separate your original project to develop other things, and that allows you to have a growing ecosystem, and that is important for crypto. We continue with CBDCs, which are potentially being launched by the Bank of Korea, which wants to launch a first test phase. Well, it remains in the same idea at the same time. In Korea, we are used to having surveillance. So I think that there will be a very good acceptance of CBDCs with what happened at the level of COVID. There has been a really impressive strengthening of surveillance tools, and the CBDC, I think, will be part of that. We come back to a news from JP Morgan, an internal note from JP Morgan, which was released by Investing on October 4, 2023. Therefore, yesterday at 17, in which we are told concretely that it is not over. We are going to suffer again because we have the investor fear index, which has risen to the highest rate. At the same time, I want to tell you it's normal given what is happening, completely logical. We are starting to have rotation in terms of obligations. It's something that is rather classic, and yes, the shares will potentially continue to bleed. But to say that it is potentially 2008, we were here, that's it. We are not saying that the current situation is the same as in 2007 minus 2008, but there are enough similarities to warrant caution. Well, we're not saying that's it, but still be careful. You know very well what it generally means when it's like that. It's that we're potentially waiting for a rebound, which would be quite classic at the same time. We'll see later when we go to see the SP 500. Concerning oil, we had OPEC Plus, which decided not to change its structure. And at the same time, Saudi Arabia and Russia also decided to remain in their decline, but they did not accentuate their decline. It was a bit of a fear of the market, but at the same time, we're going to ask ourselves the question of whether they will be able to do it. The Saudi review, given the drop in the price of oil that we have already had, and the low part, had the year 2023 rather in the red, clearly at the level of its balance. While it is quite rare, we still find ourselves in a balance which is relatively high, but at the same time, the reduction in production implies a yes, potentially an increase in price, but above all, a reduction in the number of barrels which can be sold, therefore implying a total reduction in turnover. And that's true, and so obviously it's going to play a big role in Saudi Arabia, its ability to continue to maintain this rate cut, and above all, to say to oneself, am I going to be able to lower it further? Production to impact the rising price of oil. Don't forget that oil is really a weapon of international politics, and that's why I say to myself that yes, it's complicated for them, but at the same time, they want to do it because they know that they have a reserve that is limited, that this reserve must be enough for them to make the transition. So at some point, you need a strong oil price to be able to get the most out of what they have left. So it's completely normal to have political tensions at the price level because we really find ourselves in countries in which we really depend on exports, whether oil or gas, on the management of their budget. So obviously, at some point, we will have a balance that will be achieved. We cannot continue to decrease. That means we are selling less and less. And if the price does not manage to increase to compensate for that, at that point, in any case, we reduce the budget which is allocated for the rest of the actions. And that's why we really see the oil here, the big break. We said that here, if we didn't hold this support, we were going to speed up to get the 83. We see that this is being done with a large candle to validate the fact that there is no increase of the reduction in the number of barrels offered by Saudi Arabia and Russia. So we have a stabilization. And I think that the news of an increase in the restriction is not likely to arrive immediately. So we will have a continuity to either retest them. So 83, as we said, next level 80, and there in the 80 we will see, do we have something which stabilizes? I think that it is the price roughly consistent at the level of the distribution of oil that we could have. Well, that we have an oil which is below the general production costs that I think we will discuss at a given moment, which has already happened several times. But for me, we will continue to zone between 80 and we will say 86. We don't forget that we are in a huge range in terms of oil. And I think we will stay in this range for a while yet because it is a political weapon. And it is something that cannot go down very low and will not be able to go very high because very high. The Americans will make sure that it goes down very low. At that point, it will be OPEC plus, which will make sure that it goes back up. At the SPF 500 level, we had our retest, which is currently being carried out. So first retest. Interesting to see that we are in the process of consolidating above at the start of the day. We recall that 70% of the time we end in the other direction. So there we would have the continuity of the retest to make a bearish continuity. If it's not validated, that means we're going to break straight away and head down to get 1.618 here. In the long term, the 4,100, on the other hand, if we consolidate above and we manage to consolidate there like that, at that moment we will have a potential to break this zone there. All right? This implies that we will visit the retest that we had left for a long time, here the 4,400. So with an effective rebound at the end of the year, so certainly the end of the quarter, so October, November, and a little bit of December, and still a little bit of December, I'm not sure. So we would potentially have 1 or 2, 3 weeks, 4 weeks really green with a few red oscillations in the middle in which we could compensate to retest this part and get back in. And therefore, we would have a dynamic which would be first impulse. We touch one, we retrace. Second impulse, we are going to touch the one, and we will see on the retracement what that gives us. But I think that we will not be far from this zone to get the 4,100. And that would be consistent with what we are telling us at the level of JP Morgan by saying, oh, it's going bad, it would be bad. And so we could continue to push precisely to get this part there and then sink in with some good news here. And precisely this good news is bad news, and therefore sink in. Once again at the level from the SP 500, do I believe in this possibility? So I think that this must represent roughly a probability of 30% for me compared to my scenarios. And I tend to tell you that there we risk being rejected and breaking bearish currently. Because in all cases, the traders do not necessarily seek to have a valuation of the price, but to have volatility. And the volatility is rather downward, especially if there is fear in the markets. This implies that there will be the liquidation that will take place. And there what we want to expect is potentially no longer fear. So we are going to liquidate a part. It is to recreate a form of enthusiasm. Is that sufficient? I don't think so. I think we should perhaps look higher, but for the moment I have no other signs. So we stay on 30%. We are relatively conservative in relation to that. Clearly at the level of BTC, it can give us an important breath. We will just remove Ishimoku to clear up the view, and we will take a little step back. We see that clearly we are in a setup where we are still in this retesting phase. We had a first upward acceleration rejection. We rewarded 50% of the candle. We are still in our ranging zone. We don't forget that's generally it. When we look at exactly what we've had recently, I told you that if we ever had a rotation in this area, potentially there was an interesting entry that I made in which I got out in this bullish acceleration here, in which I had already reduced my position when I actually saw the difficulty that we had. Because what we expect in this type of passage is to have an acceleration. A retest is a acceleration. When you start grinding like this, it's a bad sign. So here I didn't cut the position. I think I should have cut the entire position. I cut half of the position, a break even, and I should have cut everything because afterwards we know how to accelerate again, which is rather classic. In fact, when we see that and we don't really have a big movement of rejection, it implies that the movement itself risks being reversed to liquidate people. The question we're going to ask ourselves is, okay, why are we reworking this area here? So there are several reasons, and I have explained to you the two scenarios that I have. I always have a thought to tell myself that we are in a downward flow trend to retest the 25,000 or perhaps a little lower. We still have a macro which potentially could grow in the coming weeks, coming days, and which could take us a little higher, although we know that the correlation between the two is relatively weak. That only prevents if we have a macro which is rather ball, and behind it we have purchases which manage to hold, we could consolidate or even grind gently upwards without any problem. So here we are in the support of our lower range, okay? So we did not do any reintegration. I am looking for the reintegration of my range to create a bearish continuity. Here, clearly that is not the case. So what we can wait for is to have one more little retest and go again. What is important to remember is that when we look at the Fibonacci, which is here, which represents the Fibonacci of this bullish acceleration, we see that we have retested the 50 here and we accelerated. So that means it was bought back on the 50. When this is added to the 50 here, what we could say is that we could very well be in a dynamic of first acceleration, second acceleration, third acceleration. So we are not in Elliotist waves, far from it, but we are in a sequencing that we have already known with waves of acceleration, which are systematically between 1 and 1.1. And where would that take us? Here, so we take this acceleration, the retracement, we will look for the 1 and the 1.1. We find ourselves at 29,700, 30,000, we will say roughly, with an overextension, which would be a 618. So we still have an interesting area here where this notion of retest would jump, where we did have a first rejection for this retest. So we had something that was relatively clean, and I really hesitate to break the rest of my position, therefore to lock up part of the profits. There I have. Stuck in this zone here at 28,000, if we ever get back into it, that validates our profit part for me. But for me, we are still in something where I tell myself that we could have one last bullish leg for go and seek the equity that is there. We know that we have equities, we already noted them last time, which are located here where we know that we have this entire ranging zone in which we did a first retest. If we ever reincorporate into above and we consolidate, that means that potentially we will look higher, we will look for the 31,000. So here we will really have to monitor because I still have my short position which is hanging around, and on which it is interesting because I have founding rate which is indeed present and which allows me to maintain my position and to be paid for maintaining my position and in which I am mainly B. But in this case, there will potentially be a new entry to make. So it is possible that I get out of this position to be able to refavor a new entry later. What bothers me about this movement is that it is still not bought by the top traders. Relatively flat order flow, no effective movement in terms of open interest. So that means that we have a consolidation of two. We see that we have the liquidity call, which is still at the bottom, although we have a liquidity call at 31,000 plus. But the majority is at the bottom. When we look at the liquidity cluster here, clearly the consolidation of liquidity is relatively weak. We no longer have this ranging phase in which we create low and high liquidity, and we are going to swipe them. What will really be important is two things. One, I am seeing a small distribution at the perpetual level here, so we are going to wait because the movement is carried by the perpetual, so we could be in a second phase of consolidation here, liquidating part of the perpetual to then sink. We can clearly see the spot, which for its part cannot hold, we have already broken. Almost his CVD is debated, so for me we have something which is not convincing. I keep here the probability of a bearish continuity. For me, there's a good chance that even if we do the first retracement here, therefore bearish acceleration, retracement, bearish continuity, something that I have in mind, I am not sure that we will break the 25-0. I'm not sure that we're breaking this liquidity zone. Or if we're going to look for them, we'll just look for them with a little bit and then leave. Here we will have to be careful, potentially have a new retest of 25-0, something that could be effective like that. If ever we are in the scenario of bearish continuity, hop, we break bearish, we'll look here, we'll consolidate, we'll leave there and there, we'll decide, are we in a deviation? We'll re-enter and we'll sync with volume. There, at this moment, there, I will have a real signal to go get 25-0. Otherwise, I will have a form of grinding in which I say to myself, okay, we are in the process of forming a new range, which will be decided here to work. There, it is not yet decided. We are going to take a little step back. It is already Thursday, we remind you. So that implies that soon we will find ourselves in a flat form. So what would be interesting is either to have an instantiation above and that we consolidate above, or at that moment below, but that we have a meaning, that we do not stay between the two like that. That would be the worst because we have a form of uncertainty, and in terms of timing for us, it will be a little more complicated for enter the market. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy. And we'll meet again for AVAX in a few hours at 13:30.